Hello there, my friends. Chris Marcus here with you for Arcadia Economics and a silvery action-packed show coming your way tonight because for anyone who's been watching, or if you're new to the show, welcome on in as well. If you're following the silver market, stunning things are happening now where we've basically reached the point where I see two primary alternatives and then, of course, the unknown, which let's not sell that put at zero just yet. But we've reached the point where either the data is indicating a run on gold, silver, and as I'll touch on shortly, platinum and palladium to boot. Either that's happening or the data is completely fraudulent, which is probably some combination of both. But the latest SLV and COMEX numbers, record setting, and let's dig in. Here we see our SLV and Silver Trust silver editions. As you can see there, 32.268 million ounces. And we've talked, me, the audience, all of us as a family, about these spikes here. This one, as you can see, was even bigger. But to put it in true context, let's just show you that it now is the largest in history. So you see it's been building the last couple months. And then this is just a stunning number, especially because it's happening at the same time that you have the delivery notices happening for July silver. Let's get down to our silver futures here. Up to 13,000 contracts, 5,000 ounces per contract. That is 65 million ounces plus 32 into this silver trust. That's what it is, 65 and 32. Let's go with 97. The number keeps getting bigger each time I check. I'm recording this Monday afternoon. Unfortunately, there's no new data out yet from the CME. We will see how that goes. But I mean, again, this is the biggest in history. And, well, I thought this was the biggest in history. We'll come back to that. On a Bloomberg article, they said the largest in 25 years. I'll have to look into. I can't imagine what would have happened in 1995, why there would have been a bigger silver delivery. I believe that was before Warren Buffett started acquiring silver. Anyway, quick look at here's the delivery notices. So there's COMEX gold futures. And I'm going to scroll down here to the monthly totals. So you see 14,000, 3, 8, 2, then 31,000 in April, 10 the non-delivery month in May, and then June was a historic 55,000. Even July starting off somewhat strong for gold. And of course, to put silver into perspective, let's find silver for you here. All right, there we go. And as we scroll down, maybe we'll make a quick stop on JP Morgan Way. Here it is, issuing almost 6,000 contracts, well over the 1,500 contract limit. I guess there's some scenario in which 3,000 is allowed, but blowing past both of those limits, again, thereby violating commodity law. But you see 4,000, 1,300, 4,000, 900, 9,000, and then now we are in record territory, or almost record territory, 13,000. Now, let's take a look at platinum, which this has really got my attention because, I mean, makes sense that people are buying gold and silver, but to see it spread to platinum is just, are we at the point where people are buying? I want to be careful of how I phrase things, but it appears to me that this would be resembling a run on the COMEX metals. Here you see 23, 431, 17, 445, 8, 14, and then already 24.99 in July. I'll be excited to see what the next set of numbers come out as. And lastly, here is palladium, where you see 84, 20, 41, 20, 20, 203. So big chunks of metal being posted for delivery. But again, especially with silver, you have the trust as well. So interesting. There was an article from Bloomberg: chaos in gold markets ripples to other precious metals. I think technically I beat them on this one. This was July 2nd, or maybe that was Thursday. I recorded videos where we were talking about this Thursday. It's my competitive side coming out here. But anyway, you see here on Monday, first notice data for July silver contracts on the COMEX showed the largest single day of deliveries in almost 25 years. Deliveries for platinum were more than 5 times the next largest month. An interesting quote talks about the spreads here. I'd recommend a few articles, this one included, checking out. Here you have Holmes. Holmes says, if a bank is short, it's hard to close the arbitrage. Therefore, instead of increasing their position as the arbitrage grew wider, which if they're short and you're going to increase that position means you're going to grow the short position, they've had to either hold constant their position or even reduce it. Now, does that to the letter describe, see, I'm like practicing my to the letter, yeah, getting into it today. But I mean, does that not describe what would the conditions where when would this come to an end? Well, when people are demanding metal, when shorts are essentially, if now again, who is Holmes? Who? David Holmes, a senior vice president at Harrius Metals. I actually remember them. Pretty sure they were on the New York Stock Exchange the years I was there. So again, I don't know David, but what he's saying there sure makes a lot of sense and interesting. I'm just going to point out these data points as they come up. And there you go. Quick note here from Butler Research. This is a subscription service, so I'm going to leave that there. You can find it at butlerresearch.com. But Ted did report today that JP Morgan, according to Ted's data, has closed out their short position in COMEX futures. Again, we had them post a big chunk of metal for, I forget how many contracts it was last week. That was interesting news. I'll be talking to Andrew McGuire possibly this week. It might be next week, but I'd be curious to ask him if, now I have nothing to, this is just a thought. I'm not saying this is the case, but he's still, he's obviously involved in the Department of Justice investigation. And I'd be curious to hear what Andrew says about, is JP Morgan putting those contracts up for delivery? Could that be some condition of the investigation? I've been writing up my petition to get them banned from, or at least people can sign if you think they shouldn't be allowed to play in gold and silver anymore. So maybe that was what made me think of it. We'll ask Andrew in an interview that's coming up, and you'll be linked to right from here. Coming up in an hour, I talked with Rick Rule, asked him where the silver was coming from, and it was interesting. He said rather quickly that it was coming from London. So there will be a lot to dig into on that. But anyway, according to Ted, JP Morgan out of its COMEX short position. Quick look at the metals. There was quite a spike in silver today. You see straddling that $18 line. Again, I talked with Bart Chilton about this, how at those round numbers, there's a lot of stop orders, a lot of trading activity. So not surprising to see when it's just staying flat. And then, you know, obviously we've seen plenty of days where it pops to the downside. But here, a nice rally, popped up 40 cents in a couple of hours, then dropped back down. Let's call it 1830 on the Kitco chart. Gold chart here, you see we're up at 1787. Man, maybe if we were in 2015 or 2016 and Janet Yellen's saying we're going to tighten, but I mean, there are headlines of second wave of Corona. Fed is still printing unlimited, probably more bigger packages on the way this year. So what happens when gold crosses 1800? All right, here are some things I will be excited to watch. What happens when gold crosses 1800, 1920, and 2000? I mean, these are some historic events. It's not like just some stock that has new earnings, but this is a barometer of what's happening in the world with reserve currency. And as you can see here, if you want to read a sensational article on the last couple months of the gold market, all the signs are there that this Enron is on fire. And my friend Ronan Manley, goodness, this one actually, the latest piece on Bullion Star, really an incredible investigative piece here. And he asked some key questions going back to these Three Stooges routine you heard between the LBMA and COMEX back in March and April. And he says, why were gold deliveries needed to COMEX in New York if there were healthy gold stocks in New York, which were near record highs, according to that article that came out somewhat conveniently timed. And when you think about that question he raises there, also, why on March 24th did the LBMA rush to facilitate physical delivery of gold in New York and work closely with the COMEX if there was no gold shortage in New York? What on 24th of March made the LBMA suddenly think that it needed to facilitate physical delivery of gold in New York when there had never been before any gold delivered from London to settle New York on COMEX? And another interesting one, how could the LBMA on March 24th already know what COMEX physical gold delivery intentions would be like in April or subsequent months when delivery intentions for the April gold futures only began to be published starting March 30th? So some great questions. I mean, an incredible article here. And as we scroll down to the bottom, there was just, again, here, look, this chart, their deposit of gold stocks. You just see this spike in a variety of Brinks deposits, and Ronan does a great job of digging into the details of what that is all about. Again, if there were such healthy gold stocks in New York, then why did the LBMA bullion banks panic and rush to facilitate delivery in New York while they were in their own crisis? So we'll see if we get some answers, but I'll bet you before the Department of Justice explains it to you, Ronan will, and hopefully we'll have him back on the show soon. Last note here, JP Morgan Chase, infamous vault facility located under Chase Manhattan Plaza, across the road from the New York Federal Reserve Building, at the same depth underground as the Fed Gold Vaults, and which most likely has a tunnel linking JP Morgan and Fed vaults. Uh, couldn't make it up, although at least in terms of the silver world, if you want to know, at least as best as I could figure out how to put this all in context and not just my thoughts on silver, but interviewed the top 15 silver experts in the world that I could find, asked really the investigation that I thought the CFTC would have been well served to do. Andrew Maguire, Ted Butler, David Morgan, Rick Rule, and more, Craig Hemke, Dave Kranzler. So far, it seems like people are enjoying the book, and the link to get it is down in the description below, right there. And a few people have asked recently, the pre-orders, most of them have been processed and are in transit, some still getting finished up, but if you pre-ordered, it's on its way. And really hope you enjoy it. If so, go leave a rating on Amazon. That helps to spread the word. And of course, though, all this silver stuff, you don't have to take my opinion for it, because right here coming your way is Rick Rule, who is hosting the Sprott Symposium in a couple of weeks, where we'll be digging into all this a bit more at the Miles Franklin booth. So just click on the button coming your way now.